Hello. So I just wanted to do a quick video to finally talk about the NFP data, which actually came out on Friday. I couldn't do a video on that day, or I wanted to do a video on ETH or whatever. But so I know that this is a bit delayed, but I just wanted to give my thoughts on the data that came out on Friday. And obviously, as everybody knows who follows the gold market, we have basically seen, if this is the 4-hour chart here, we saw a huge dump in gold, right, from about the 1800 level. Once we had that ridiculous fake breakout on this particular day, I mean, we saw almost a 2% drop in gold, I think, from 1800, whatever it was, 1760. Anyway, a really, really wild dump again with gold, which happens a lot in gold, right? Like you'll often see as you've analyzed the gold market more and more that gold will tend to go up in steps, but then when it dumps, it really tends to dump really, really badly. And that's primarily due to those liquidations, right? People trading on margin and they're just getting fucked, right? So that's what we really saw. And if you guys aren't aware, the data that came out with the NFP or the non-farm payrolls data was, you know, quite a bit higher than expected. And this is one of the first times where we've actually exceeded expectations in recent months with the NFP. So obviously this was maybe a little bit surprising for people. I mean, we hit over the forecast by almost, what was that? Yeah, 70,000. And also at the same time, we saw unemployment finally decline better than expected, right? From the 5.7% forecast, we saw 5.4%, so a 0.5% deduction. And all of this kind of data that we're seeing here actually falls in line, funnily enough, with what the Fed has been saying for the longest of time, that over the next coming months, we're really going to see things improve from a jobs data standpoint, from an unemployment standpoint, as certain benefits get taken away, people will start going back to work more. The jobs were there, but people, it just takes time for the market for the economy to really recover and all those different types of things, right? So I think, you know, obviously from a short-term standpoint, when I look at this data, right, kind of in line with the Fed and all that kind of stuff, um, obviously I guess it would be very, very kind of positive for the dollar and consequently negative for gold, right? Everything is now kind of going in line with what the Fed has been saying, right, with this kind of data, right? And we can only expect the unemployment data and these types of things to improve over time, right, over the next coming months. It's only going to get better, right? Most likely. The economy is recovering. I mean, this is something that we all know, right? So, um, does that mean we're probably going to start seeing like weaker and weaker and weaker gold? Um, is this just kind of the beginning of this kind of capitulation? And my overall sentiment, though, is funnily enough, like I'm still like weirdly bullish on gold in the kind of like longer term time period, like whether that's over the next few months or so. And I actually think that this dump that we saw here is actually something really, really nice and potentially gives us a good buying opportunity. Now, why do I actually think that? Well, first of all, um, I think that this surprise, I guess, in the data for like the employment numbers, the jobs numbers, etc., obviously was kind of, I guess, shocking for the market, which led to this kind of dump in the in the price of gold. But as more and more positive data comes out for jobs over the coming months, I think the market is going to be react less in a less volatile way to this kind of more positive data. And I'm not necessarily sure that just because over the coming months we should see better and better jobs data or better NFP data or better unemployment rates, that it's just going to constantly lead to these constant dumps in the price of gold. Um, and while we did see a strong rebound in the dollar, I just think that as well, which leads to my second point, the inflation issue is still not resolved. Okay, so you can talk about unemployment all you want, but we all know very, 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 very well that that inflation is still a really, really big issue, right? That just because this jobs data is improving and the unemployment rate is improving, that it's not going to necessarily signal for the Fed to stop what they're doing and to really tackle the inflation number properly, right? I think that was pretty clear from the message that the Fed was sending in the last press conference. And yes, okay, they could start talking a bit more about asset tapering and all these different types of things. But I think it's pretty clear at this point that the Fed is very aware of what raising interest rates or doing all, and pulling back on the quantitative easing, what it's going to do to the markets. They do not want to fuck around with their rates. Okay, like that's just the reality. And that was clear that was a clear message from the last press conference, right? The reason is because the the economy can improve however much it wants, or the jobs can improve, people can get back to work more, blah 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 blah. That can all improve, but the fact of the matter is that the the Fed has really fucked the economy by printing way too much money, and we all know that. Okay, we all know that the inflation is not just a supply shortage issue. We all know that the Fed has fucked themselves, okay, and fucked the American economy. So if anything, we have this now, potentially these two narratives competing against each other, where maybe the jobs and the NFP data is going to constantly improve month to month, but I don't see the inflation number necessarily dying away or the inflation problem going away, right? And I think this holds much more sentiment in the market than this just positive job data. So ultimately, given where we are right now, right, if we're looking at the chart too, we're at a really, really strong support and resistance line or range, right? If we look here, I'm on the 4-hour chart right now, like basically all the way since back November, right? If I draw the rectangle, just give me a second here. Where's the rectangle tool? Here we go. You can see here, this general support line or support range has constantly held very, very strong in recent history. Whoops, right? So if anything, from a longer term time period and from a longer term perspective, just also given the macroeconomic fundamentals, I think that this is really approaching an awesome discount opportunity to buy into gold. Okay, um, we held so strong in the last dump, right? And that was the dump really caused by the Fed trying to, talk about interest rates and all that stuff. We saw the reaction. I don't think the Fed wants any of that again. And um, I just think that, okay, yes, this dump is alarming and it could signal further pullbacks, but at this price range and even at lower levels, this is when I think in terms of being a gold bull, like from a purely long-term standpoint, this is the time to get greedy and to start buying into positions, because I still think that that inflation narrative, you cannot ignore that. You cannot ignore the fact that it's a problem and the Fed doesn't want to deal with it, doesn't want to actually mitigate that problem. And that I think is going to override any economic recovery narrative. When the inflation data comes out, when more PMI numbers come out, when more CPI numbers come out, it's just going to become more and more and more and more apparent. And as that situation gets worse, I think the markets are going to continue to act really, really negatively towards that, right? Or positively in terms of gold. And on the other hand, the jobs data, that kind of employment data, the economy is not going to, or the markets are not going to necessarily react as strongly every single time, in my opinion. So I'm really looking to potentially take just a longer term position in gold now here. I'm kind of interested in it. Obviously, I'm going to see what happens, but I already think that this just where the price of gold is right now, it's at a good discount. Um, and I think that this presents a really, really good opportunity potentially, I do still think that, provided that you're doing it in a smart way in how you're investing into gold, right? For example, if you're taking a margin position, obviously make sure you have enough money to support any potential loss if it goes back down to the low 1700 levels or whatever, right? Obviously make sure you have enough you have enough capital, but I just think that the chances of us going further down here are definitely much lower than us retesting 1850 or 1900 from here. And that's really, really, really nice return, right? Again, just given those more macroeconomic fundamentals. Forget all the technicals aside, right? This is just really from a more fundamental standpoint. And then, of course, also from the technical, just really simply, we're at a very strong support range right now. We're at a very, very strong support range. So I'm definitely looking into this now. And I don't know if you guys agree, but that's just my take. Let me know what you think. If you disagree or if you agree, leave a comment, give me a thumbs up, and I'll talk to you later.